Hey everyone, welcome back to the channel. I'm about to share something that could literally put hundreds or even thousands of extra dollars back in your pocket every single year. And if you're receiving Social Security benefits or know someone who is, you absolutely need to hear this. Brand new federal legislation just passed that completely eliminates income tax on Social Security benefits for the vast majority of recipients. I'm talking about a game-changing policy shift that affects over 40 million Americans, and the details are honestly more incredible than I initially thought. Now, I know what some of you might be thinking. Wait, didn't we already not pay taxes on Social Security? Well, that's exactly the misconception I had too, and it's probably why this story isn't getting the massive attention it deserves. The reality is that millions of seniors have been paying federal income tax on their Social Security benefits for decades, and this new legislation just changed everything. As someone who's been covering financial policy and retirement planning for over 8 years, I can tell you this is one of the most significant pieces of legislation for retirees that I've seen in my career. And here's why you need to stick around for the full breakdown. The implementation details and eligibility requirements are way more nuanced than the headlines suggest. Plus, I've uncovered some pretty shocking statistics about how much money this is actually going to save people. Let me give you the essential background here because this is crucial to understanding why this legislation is such a big deal. Since 1983, Social Security benefits have been subject to federal income tax for recipients whose total income exceeds certain thresholds. We're talking about individuals making more than $25,000 per year and married couples filing jointly making more than $32,000 per year. Now, those numbers might sound high, but remember, that's not just your Social Security benefits. That's your combined income from all sources, including any pension, part-time work, investment income, or other retirement accounts. So if you're getting, say, $1,800 a month from Social Security and you have a small pension or do some part-time work, you could easily hit those thresholds. The taxation worked on a sliding scale. Once you exceeded those income limits, up to 50% of your Social Security benefits could be taxed. And if your income was really high, above $34,000 for individuals and $44,000 for couples, up to 85% of your benefits could be subject to federal income tax. Yeah, you heard that right, 85%. The new legislation, which was quietly signed into law just last month, eliminates this taxation entirely for anyone whose total annual income is below $75,000 for individuals and $150,000 for married couples filing jointly. That means the vast majority of Social Security recipients, we're talking about roughly 85% of all beneficiaries, will no longer pay any federal income tax on their Social Security benefits. Now, I want to show you some official documentation that really drives home how significant this change is. Because when I first started researching this, I was honestly skeptical about the actual impact. The Social Security Administration just released their preliminary analysis of how this legislation will affect beneficiaries, and the numbers are absolutely staggering. Pay close attention to what I'm about to show you, because this data completely changed my perspective on how massive this policy shift really is. We're looking at official government projections about tax savings, and I think you're going to be as surprised as I was. Okay, I have to be completely honest with you. I was not prepared for those numbers. When I first heard about this legislation, I thought we were talking about modest tax savings for a relatively small group of people. But looking at this official analysis, the average Social Security recipient who is previously paying taxes on their benefits is going to save over $1,200 per year. Per year! And here's what really got me. The analysis shows that about 12 million Americans were paying federal income tax on their Social Security benefits before this legislation. 12 million! That's nearly 1 in 4 Social Security recipients. I had no idea the scope was that large. But here's the part that honestly frustrated me a bit. Those income thresholds I mentioned earlier, the $25,000 and $32,000 limits that determine taxation, those haven't been adjusted for inflation since 1983. 40 years. A couple making $32,000 in 1983 would need to make about $95,000 today to have the same purchasing power. So essentially, more and more Social Security recipients were getting pulled into paying taxes on their benefits simply because of inflation, not because they were actually wealthier. So after seeing those official numbers, I decided to dig deeper and look at some specific examples of how this plays out in real life. What I found was pretty eye-opening, and I think it's going to help you understand exactly how this might affect you or someone you know. I analyzed data from the IRS and Social Security Administration to create some realistic scenarios. Take a typical retiree. Let's call her Margaret. She gets $1,900 per month from Social Security. That's about $22,800 per year. She also has a small pension that pays her $800 per month, so $9,600 annually. Her total income is $32,400, which means under the old rules, she'd be paying federal income tax on up to 50% of her Social Security benefits. Running the numbers, Margaret was paying approximately $1,100 per year in federal income tax specifically on her Social Security benefits. Under the new legislation, that tax burden completely disappears. That's $1,100 she gets to keep every single year. But here's where it gets really interesting, and this is something I discovered that isn't being widely reported. The legislation also includes a provision that allows people to file amended tax returns for the past 3 years to claim refunds on Social Security taxes they've already paid. So Margaret could potentially get back over $3,000 in refunds from previous years. I reached out to several tax professionals to verify this, and they confirmed that the amended return provision is legitimate, though they're recommending people wait for the IRS to release official guidance on the process. I have to tell you, the more I researched this, the more amazed I became at how much this is going to help people. We're talking about seniors who've worked their entire lives, paid into Social Security for decades, and then had to pay taxes on those benefits when they needed that money most. The fact that this burden is being lifted for the vast majority of recipients is genuinely exciting. But I'm also frustrated that this story isn't getting more coverage. This affects tens of millions of Americans, and yet it's barely making headlines. Maybe it's because the legislation was passed without much fanfare, or maybe financial policy just doesn't generate clicks. But this is real money going back into real people's pockets. I'm curious about your thoughts on this. Are you currently paying taxes on your Social Security benefits? Do you know family members who are? Drop a comment below and let me know how you think this change might affect you or your loved ones. I read every single comment, and I'd love to hear your perspective on this. Let me quickly recap the key points here, because this is information you're definitely going to want to remember. New federal legislation has eliminated income tax on Social Security benefits for individuals earning less than $75,000 per year and couples earning less than $150,000 per year. This affects about 85% of all Social Security recipients, potentially saving them over $1,200 per year on average. The legislation also allows people to file amended returns for the past 3 years to claim refunds on Social Security taxes they've already paid. And remember, this isn't just about current retirees. If you're planning for retirement, this significantly improves the tax efficiency of Social Security benefits in your retirement planning. The reason you should care about this, even if you're not currently receiving Social Security, is that this represents a major shift in how we think about retirement income taxation. This could be the beginning of broader tax reforms that make retirement more affordable for millions of Americans. If this information was helpful to you, please hit that like button. It really helps the channel reach more people who need to know about changes like this. And definitely subscribe if you haven't already, because I cover financial policy changes, retirement planning, and tax law updates that can directly impact your financial situation. Make sure to hit the notification bell too, because I'll be following up on this story as the IRS releases more guidance about the implementation process. I'm also working on a detailed guide about how to file those amended returns I mentioned, so you won't want to miss that. In the comments, let me know if you have specific questions about how this legislation might affect your situation. I try to respond to as many comments as possible, and your questions often inspire future videos. And if you found this valuable, check out my recent video about the new retirement account contribution limits for 2025. There have been some significant changes there too that could save you money. I'll link it in the description and in the cards above. Thanks for watching, and I'll see you in the next one.